Hosted by Matt Reaches. $1 trillion tickets. $1 trillion tickets. Watch the market unfold. $1 trillion tickets. Turning data. Good morning, good afternoon, or good evening. Wherever you're tuning in from around the globe. Peace, blessings, financial freedom. Peace, blessings, financial freedom. Peace, blessings, financial freedom. Welcome to the $1 Trillion Tickers broadcast. I'm your host, Matt Riches. It is Friday, June 5th, 2026. The market is closed, and what a day in the market it has been. This is one of the biggest market sell-offs we've seen in about a year. Non-farm payrolls came in way hotter than expected. SPX finished down crazy. The Nasdaq 100 finished down crazy. The Dow even finished down 1.6%. The VIX exploded, up almost 40%. Bitcoin broke underneath 60,000. Tech, chips, memory, high beta all got destroyed today. So today's check-in is about a full market reset, not a small pullback. The real risk-off session. We're going to get into these numbers, but before we do that, let's get into the mindset to help us through this bloody day in the market. Let's get into the mantra. I deserve to be healthy. I deserve to be happy. I deserve the wealth that I'm building for me and my family. Riches and freedom, they come to our hands. I am the master of all I command. My learning is limitless. My earnings are too. The more I discover, the more I can do. The stock market is a machine of design, and I have the power to make that wealth mine. I am capable. I am skilled. I am bold. Blessings on the journey as the vision unfolds. All right, let's get into some of this data, y'all. So, here's what made today so important. The jobs report came in much stronger than expected. Average hourly earnings month over month came in right at the forecast at 0.3%. The unemployment rate came right in at the forecast at 4.3%. But non-farm employment change, that was insane. Forecast was 85K. It actually came in at 172K. That payroll number changed. The markets move fast. A strong labor market sounds good for the economy, but in this environment, it also tells the market that the Fed may not be done. And yes, when it comes to rate hikes, that is what the market is reading from that report. Reuters reported that there's now a 65% chance of a Fed rate hike by December, up from just 48% on the previous jobs report. And Axios also reported a 67% chance of a rate hike by December, up from 45% last week. That's why the market sold off so hard. This was not just one jobs number. This was the market repricing interest rate risk. Now, let's look at the damage, y'all. I got to pull up the charts for this, y'all. SPX. Look at this candle. Y'all. Look at all these green days that it took to get up here. And look how many days it took away in just one candle. So when they say the stock market takes the escalator up or the stairs up and it takes the elevator down, that's what happened today, folks. The elevator is down. right into the smart money concept support zone. Okay, so SPX was down 2.9% today. The NAS 100. Look at this candle, y'all. Look at all these green days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 green days in a row. 3 red days in a row erased all that green. So it goes down 3 times faster, at least, than it went up. The NAS 100 was down 5.1% today. Wow. Incredible sell-off, y'all. The Dow Jones is down 1.6%. That's not too bad. But look at the VIX, y'all. Look at this VIX candle right here. The VIX was up 39.7%, and we are now above 20 in the VIX. The VIX is now 21.5, y'all. The 10-year Treasury yield note. Oh, looks like we filled this gap, so I can delete this gap. Looks like we filled this gap as well, so we can delete this gap too. It's up. It's now back at 4.54%. Gold sold off, down 3.2% to $4,328 an ounce. Look at AMD. AMD sold off 10.8%. Y'all, $56 AMD dropped today. And look at Bitcoin. Bitcoin actually hit $59,073 today, y'all. It actually broke the February lows, which was 60,000. It's currently over that. It bounced to 61,700 right now, but it did break those lows and it did break 60,000. Ethereum broke 1,600 and it went to $1,539. BMNR got clapped, down 11%, down to $1,590, y'all. Palantir got clapped. Robinhood got clapped. All the memory stocks got clapped. SanDisk down 11%. MU down 13%. Western Digital down 11%. Even the memory ETF got clapped, down 15%, y'all. Stocks sold off crazy. Crypto sold off crazy. Gold sold off. Tech sold off crazy. Memory sold off crazy. Chips sold off crazy. Oh my God. Let's look at these $1 trillion tickers, y'all. Nvidia. I'm going to take off my levels so we can get a clear picture. So you could just look at the candles. You ain't got to look at nothing else. Look at this candle, y'all. Nvidia down 6.2%. Google was not too bad. Google actually had an inside candle on the day, and it was down almost 1%, down 0.9%. So Google survived this red day. Apple down 1.25%. Not too bad for Apple either. But Microsoft down 2.6%. Amazon down 3%. TSM down 6.6%, y'all. Goodness. AVGO, after this gap down on earnings, is still falling. AVGO down 7.9%. Meta down 5.5%, y'all. Meta closed under 600 today. Tesla got clapped. Tesla down 6.5%. MU trying to go down to this gap right here. MU closed under 600 today, y'all. MU closed down 13.25%. $131.99, y'all. MU is now $864. We did have one green ticker in the $1 trillion tickers, and that is Berkshire B. Berkshire B was up almost 2%, y'all. It was up 1.98%. Almost $10 today. Okay. Now we do have because of today's sell-off, we have some $1 trillion tickers that have been kicked out of the club. Walmart gone. Walmart been gone. But today, Micron gone. Deleted. SK Hynix gone. Deleted. Holla at me when you get back to $1 trillion. Until then, out of here. All right, let's check out the sectors, y'all. Let's check out the sectors. Technology down 6.6%. Consumer discretionary down 2%. Communications down 1.2%. Energy down 1.8%. Financials up 0.2%. Healthcare up 0.6%. And the winner on the day, as far as sectors, was consumer staples. You know, when risk goes off, money flows into consumer staples, y'all, and Berkshire B. Consumer staples up 1.7%. Utilities up 0.9%. Industrials down 1.1%. Materials sold off too, down 1.9%. And the real estate sector up 0.6%, y'all. Ooh, what a day, what a day. Let me show you some of these ETFs, though. You ain't gonna believe this. IWM down 3.5%. SPYM down 2.5%. QQQM down 4.7%. SPYG down 3.8%. SOXQ down 10.1%. TQQ's down 14.2%. And check this out, y'all. SOXL down 30.5%. Down $80 today, y'all. SOXL down $80 today. Close the gap. Wow. SMH down 9.2%. SOXX down 10.4%. XLG down 2.69%. The IVES 30 down 6.1%. SPYI down 2.2%. And QQQI down 3.9%, y'all. What a day, what a day, what a day. Oh my goodness. Let's check out the heat map. Woo, all I see is red in technology, y'all. Goodness gracious. What a day, y'all. Woo! All right, let's get into Robert Greene's daily law for today. Title: Create dramatic effects. Today's law is about timing, suspense, and impact. Robert Greene uses Franklin Roosevelt as an example of someone who understood dramatic pacing. Roosevelt stayed quiet before taking office, allowing tension to build. Then, once he stepped forward, he moved quickly with bold action. The contrast made his leadership feel even more powerful. The lesson is that timing matters. You do not always reveal everything at once. Sometimes the effect is stronger when events unfold with rhythm and contrast and surprise. For long-term investors, today's market is a reminder that dramatic effect happens in markets too. A trend can build for weeks. A rally can keep pushing higher. Sentiment can slowly stretch. Then one report can change the entire tone. Today, the jobs report created the dramatic shift. The market went from record highs in AI euphoria to a broad risk-off reset. Long-term investors should not panic from one day. They should respect what the market revealed. When rates get repriced, valuation matters. When yields rise, extended growth stocks can get hit fast. When leadership breaks, Risk management matters. For day traders, today was a perfect example of why timing matters. The market did not drift slowly. The market did not drift lower quietly. It moved with force. Volatility expanded. Tech cracked. Crypto broke. Semiconductors collapsed. On days like this, you cannot trade casually. You have to respect the move, respect the speed, respect the volatility, and understand that when the market creates a dramatic effect, your job is not to argue with it. Your job is to respond. Execution over emotion. Process over prediction. Ooh, what a day, what a day, what a day, y'all. Let me get into some news. All right. First news comes from TrendSpider. Robinhood insider Meyer Malka has been loading up, purchasing more than 35 million worth of shares over the past 2 weeks. Ooh. 35 million worth of shares. She is not playing out here. Talk about a new position in Robinhood. Okay, next. The SEC, so this happened yesterday. The SEC has officially eliminated the $25,000 minimum equity requirement for day trading. So you can trade as much as you want. There's no minimum requirement. Keep your risk management on point or you will blow your account. Next, we got Andrew Yang. We got a quick clip from him on Squawk Box yesterday.
The powers that be have said, look, we got to stop talking about kicking workers to the curb because people are starting to hate us. People are protesting data centers. Someone threw a Molotov cocktail and took a shot at Sam Altman's house. So then the message has gone out, look, this is going to be fine for workers, but we know different. It doesn't make any sense. And I'm going to say, too, I run a company, Noble Mobile. The easiest people to fire are the people you haven't hired yet. So are we replacing junior analysts, junior engineers with AI? 100%. And if we are doing that, then I guarantee organizations around the country are doing the exact same thing.
Did he say the easiest people to fire are the people you haven't hired yet? Interesting choice of words. Next, Apple says that its App Store ecosystem has reached 1.4 trillion, y'all. Bigger than most companies on the market. Excuse me. Next, Amazon just built a robot that can feel. It's called Vulcan. And it's the first robot in Amazon's history with a sense of touch. Here's why that matters. Excuse me. Most industrial robots are, in Amazon's words, numb and dumb. When they hit something unexpected, they either emergency stop or smash through it. They don't know contact happened, but Vulcan knows. It uses force feedback sensors to measure exactly how hard it's pushing, how firmly it's gripping, and stops before doing damage. The practical result? Vulcan can reach into a cramped 1 square foot storage bin holding up to 10 items, push things aside to make room, and stow or pick up a specific product without disturbing anything else. It handles roughly 75% of all items Amazon stores at speeds comparable to human employees. Deployment across Europe and the US begins over the next couple of years. So that means more jobs taken by robots and AI, y'all. So do expect Amazon to price to run up over the next few years. Next, Amazon just announced a massive European push at its Delivering the Future event in London. Here's everything they dropped. The headline: about 10 billion plus to expand and modernize fulfillment centers across Europe with next generation robotics. On jobs, Amazon plans to grow its European fulfillment workforce by 25,000 over the next coming years. It It already supports 1.5 million jobs across Europe today. On robotics, the next gen Proteus robot that employees can direct using plain conversational text, no coding, no technical commands. Deployment in Europe is planned for the first half of 2027. On delivery, Amazon now ultra-fast 30-minute delivery expanding to Manchester and Birmingham this year. Same-day delivery hitting 25 plus European locations with order cutoffs as late as 5 p.m. for same-day arrival. On workforce training, $1 billion committed to career choice by 2030, covering cybersecurity, software development, and renewable energy for employees globally. On EVs, Amazon hit 50,000 electric vehicle delivery vans on the road, halfway to 100,000, which is the goal by 2030. In 2025 alone, Amazon invested more than $60 billion across Europe, largest annual European investment in company history. All right, what else we got? Apple will rely on Google's fleet of NVIDIA chips to power its overhauled version of Siri when it launches in September, y'all. That's $3 trillion tickers collaborating. Isn't it wonderful? Collaboration over competition, y'all. Next, this is from Unusual Whales. It says average retirement account balances in the United States. They are up from Q1 of 2025 and are up from Q1 of 2026. Let me run these numbers, y'all. You might find them interesting. The average 401k in Q1 of 2026 has 141,000. The average IRA has $131,380, and the average 403b has 130,000, y'all. And it's up. It's been going up every year, so I like that movement to the upside, y'all. Next, a couple days ago, Kathy Wood from ARK Invest bought 267,582 shares of Google. Maybe she should have waited. Well, Google didn't go down that much today, only less than 1%. All right, next, Goldman Sachs says SpaceX can grow its revenue 100x in just the next 4 years to $322 billion a year. That is the same Goldman Sachs who's leading the SpaceX IPO next week. So, of course, they're going to give numbers like that because they'll be making money off it, y'all. All right. What else we got? JP Morgan has raised its Tesla price target to $475, up from $145. This is after the bank was chosen by Elon Musk to be a part of the SpaceX and earn hundreds of millions of dollars in fees. So, yeah. So, JP Morgan has raised its price target after Elon chose them to make hundreds of millions of dollars in fees, of course. Sounds like a good deal. The Fear and Greed Index. We are in fear, y'all. We were in neutral for, about a week? And now we are in fear at 42, y'all. We did not make it to extreme greed this time. We are back in fear, back at 42. Next, SpaceX has signed a $30 billion cloud compute agreement with Google, y'all. Next. Oh, we got a quote. We got a tweet from Mark Monroe. It's been a minute, y'all. Mark Monroe said, okay, so the market just priced in a potential December rate hike. Chip stocks profit taking has begun for the first wave, the early birds. He says, I'm watching certain companies still hold levels as the risk management and portfolio rebalancing takes place. We're also seeing pre-IPO selling for cash to buy in. Okay, so a lot of companies are taking profits so they could buy into this SpaceX IPO next week. Okay, makes sense. Next, he said the Fed will have to face 3 alternatives soon. Will the Fed follow the playbook of its predecessors or take the alternative path, which is undesirable? Short interest was growing toward chips and other speculative positions. Next, he said, unless I see orders falling off the table from companies, I don't see an issue. Pay attention to the scarcity issues. It's very real. I think companies like Apple, Mac sales are in very high demand due to AI, and now Microsoft is jumping in on it. OpenClaw is a real thing. What a day, what a day, what a day, y'all. Marcus, I don't even want to check my account. Oh my God, I might be down like, ooh, I don't even want to say it. I'm definitely down 5 figures. Definitely. I might be down like 15, 20 bands, for real. I don't even want to check it, y'all. Ooh. Appreciate y'all for tuning in. Shout out everybody on YouTube Live, y'all. We'll be back tomorrow. We'll be doing some charting. The chart's going to look very different because everything's sold off, yo. Let's end the show how we like to end it, with some Instagram motivation. Of course, I forgot to refresh. Give me a second, y'all. Here we are.
But chase money. Chase excellence, never chase money. Why? Because money has an incredible way of finding excellence. Did you chase excellence and not money? Do you have the intellectual curiosity to learn everything you can about this incredible industry and master it? Become the smartest person in the room. Have you mastered it?
Shout out Dr. George Frazier, y'all. The marathon continues.
It don't happen overnight. And there's going to be moments when it's really, really frustrating. And there's going to be moments when it's really, really inspiring and empowering. And if you get too high off the highs and too low off the lows, you're going to take yourself on a ride that's very uncomfortable. I think it's just about being committed to the work and appreciating it, when it's good, and not stressing too bad when it's bad. Just appreciating the work and staying focused on showing up every day.
This has been the $1 Trillion Tickers broadcast. I'm your host, Matt Riches.
Hosted by Matt Riches.
Peace, blessings, financial freedom. Peace, blessings, financial freedom. Peace, blessings, financial freedom.